So guys, we have a huge shakeup in the top 10 retail stocks that were bought by us, the little guys, the retail investor, and sadly, it appears that some bad habits are once again picking up. And honestly, with some of these, I have no clue what we're doing. But let's discuss the good and the bad from this list, because it's not all doom and gloom, guys. We definitely had some great picks this past month as well. Just make sure you like the video if you like getting the truth out the hype, because that's exactly what you're going to get today. Even if it makes a few of you guys upset, I apologize, but that's the best that I can do here, is just simply give you the truth out the hype. Now remember, with this list, these are not my top 10 picks, guys. I'm sorry. I got a list coming out later on for the stocks I'm looking to buy for the next month. Yes, I know some of you guys don't like the fact that sometimes they're the same stocks, but hey, I can't control what's on a discount whenever that comes. You know, whenever Palantir was at $7 forever, I heard the same complaints back then about my list about why don't I come up with any new stocks? Why are you just always buying Palantir? It's going nowhere. Well, given its run and given how many shares I was able to accumulate, because I kept it on my list for years at that particular stage, that's the reason why I leave them on there. But that's a different list. That list is my picks. These are our picks as retail investors, compiled up over the past month. What were we buying as retail investors? This is exactly what we were buying. Some of them are great stocks, like I said, some of them not so great, but these are not my top 10 stocks. So just want to make that perfectly clear, because there's always a few comments down there in the comment section that, hey, Luke, why do you have these on your list? Why don't you have this stock on your list or that stock on your list? Hey, it's not my list, guys. Sorry, I can't make this up. This is what we were buying as a whole as retail. So stock number 10 is Disney. All right, well, as you guys know, with Disney, they have business problems. I don't know if we're playing this one as a turnaround play, possibly. I don't know, maybe there's more there in regards to Disney. It's one that definitely baffles me as to why we have so much interest in it. Now, I personally own some shares down in the 70 range or so. I felt like that was a great buy point for kind of risk reward of can they turn the business around or not. And so far, obviously, that's paid off very, very well in regards to appreciation so far. Definitely a lot faster than I thought it was going to come, but they are not out of the woods yet. So if you were thinking about this or you're buying this, you better have a really long time horizon here, because they have a lot of business problems that they have to solve along the way. And it's not going to be an easy journey. More importantly, this is like a giant cruise ship. It takes time for it to turn around. It's not a nimble, agile, speedboat per se. So you can't expect that sort of turnaround, even though we've gotten good returns on the stock so far. I don't know what the play here is specifically for us as retail, but at least it wasn't up the list like some of the other terrible picks that are up the list here that we'll get to shortly. So stock number 9 is Meta. Great company, great everything, and it moved up the list instead of down the list. I don't understand it. This is one of the ones to where, especially when you kind of hear some of the stocks that are ahead of this one, just kind of makes you scratch your head a little bit here. It's been on a nice little run, but it's not overvalued. It's still undervalued. Or if you want to call it fair value, I'm okay with that too. But it's a great company with a massive runway and many profitability levers that they can absolutely turn tomorrow and spit off massive bottom line profits. There's really not a whole lot that they can do any better than what they're doing right now. So again, it's been a great stock. Definitely one. Obviously, it's not down in the 80s anymore. That was a, kind of a once in a lifetime kind of opportunity there, but definitely one we added to last year in the 450 range or so. So it definitely gives you discounts here occasionally that you can really take advantage of and make a lot of money on, more importantly. So I understand why Meta's on our list, but to see it fall down and kind of start to fall towards the end of the list kind of is a little bit concerning for me. So stock number 8 is Palantir. And yep, this is another one that I believe moved down the list once again. Now this one I kind of understand, because if you're basing it on valuation, it's definitely overvalued by any metric. I think even the bulls will tell you it's overvalued at this stage. There's not a whole heck of a lot you can do in regards to Palantir to say that it is undervalued. It's just not. So this one moving down, if that's the reason why it moved down, it makes perfect sense. Obviously, you DCAers out there, just keep right on DCAing. I actually have a video touching on Palantir specifically, exactly what I would do if I was trying to build out a position from scratch and not touch Palantir at all. And I don't have a single share of Palantir, how I would do it. It's absolutely what I have coming for you guys here shortly. But Palantir sliding up the list, hopefully that's the reason why. It's just simply valuation concern, not the fact that they think the next stock is actually a better stock. And that next stock would be GameStop. I don't know, guys. I got nothing for you. I would never buy GameStop over any stock on this list, much less, Palantirs and the Metas of the world. I have no clue as to what we're thinking here with this one. Once again, it has moved up the list. It looked like it was going to move out. It was close. It was so close. And then here it is moving right back to the middle of the pack again. I don't know. Maybe Wall Street Bets is keeping up again. I know somebody arguing with me down in the comment section. Somehow it's a great business. And, no, they didn't dilute you and do all these other crazy things in order to actually carry cash on the balance sheet and stuff like that. It didn't come from operations, guys. That's the part that matters. It didn't come because they were so profitable. They were able to put all this cash over here and stack it up on the balance sheet. This is just, if you don't understand fundamentals of how to just look at financials in general, honestly, that's kind of where you got to start. If you don't understand that, you really have no business investing in stocks, period. So I don't know what we're doing with this one. Maybe there's another super short squeeze coming that's going to make everybody gajillionaires. I don't know, but I don't know. It didn't work out well last time. I'll continue to play the game a different way and continue to stick with my strategy here and stay far away from a stock like GameStop. Next up is Microsoft. Hey, great company, guys. I see exactly why it's right there in the middle of the pack. Obviously, you might be able to say it's a little bit overvalued right now. It's not crazy, nothing over the top or anything else like that. We're not looking at a Palantir type situation here, but a great company, great stock. Thank goodness it's at least ahead of GameStop. I don't know, guys. I'm sorry. I'll move on from that. But nonetheless, don't worry. It gets worse here in just a second. But nonetheless, Microsoft, great company. Totally understand why we're buying that. Those of you guys out there that are DCAers, continue right on DCAing into great companies there. They're obviously at the forefront of the future. Obviously, they're a huge part of the past and the current. So nothing but great things to say about Microsoft overall. But I can't say the same for the next stock, and that would be Ford. Another one of these. I don't know. You want to own Ford over Palantir, over Microsoft, over Meta? I don't know. I don't get it. Never have gotten it. Some folks said it was for the dividend. Again, I think there's far better dividend plays out there. Shoot, you just could have bought bank stocks a couple of years ago, and we're up more than double on those. JP Morgan and Goldman Sachs, specifically for us here in our group, or at least that's what I was buying during that particular point in time. I already doubled up the share price and pays me a very, very nice dividend. So to me, there's a lot of different dividend stocks out there that are far better company than Ford. Unfortunately, it just has a terrible balance sheet, terrible albatrosses all over the financials that they can't get out of. That's just kind of the case. And one of the reasons why I stay away from legacy auto and a lot of other businesses like that, because they just don't have the ability without a massive bankruptcy and a huge changeover in some of those albatrosses being released. There really is no way to release more profits. There really is no way to get any more or that much more margins out of your products themselves. It's just incredibly difficult. So it's one I'm staying far, far away from. No clue what retail wants. I'm waiting for a great argument down in the comment section. I appreciate you guys trying to help me out there. It's just one I don't get. So next up is Apple. You guys know I love Apple. It's my favorite stock in the stock market. It's been finally cooling off a little bit, but to me, it's still trading on the rich side. But that is where big money is going for safety. Obviously, with all the tariff noise and everything else, Apple took a little bit of a hit there in regards to that, but not nearly as big of a hit as I thought it was going to take, given how much they're reliant on China. And, obviously just for the production of all their products and everything else, much less the market there in China. So a little bit surprised that it held as well as it could. But that is where Wall Street is going for safety. And obviously us as retail investors as well, we're also buying that stock en masse. So, okay, I can make sense with this one. I'm right there with you guys on it. Number 3 is Amazon. Well, it made a massive jump last time around on this list, and it has maintained that momentum. I love it. Amazon, great company. Prior to this, actually 2 months ago, it was really, really cheap as well. But nonetheless, it's a great stock, still undervalued in my opinion. So it's definitely one. It's not too late or any of the other, YouTube narratives that bounce around out there from time to time. Great company, great stock. Obviously, I will continue to buy it as well. Every time it gets below $200, it's definitely a buy for me. Definitely want to just continue to do my modified DCA on just like clockwork, just like I've been doing with several other stocks that just, I don't know. I don't get what Wall Street's thinking, but that's to our advantage as retail investors. I've never really understood anything Wall Street does. I just know they give us massive opportunities for no good reason, and you just got to take advantage of them. Number 2 is Nvidia. Well, this one's no surprise once again. Great company, reasonable valuation. No problems here whatsoever. You guys know I don't invest in the chip sector in general just because I don't understand it. I don't understand the business model well enough to comfortably own it, so I don't. And that to me is just one of those rules that I have personally for myself. You can do as you please, obviously. But I know a well-run company whenever I see it, and absolutely Nvidia is that. Definitely one of the best companies in the world as given by their stock performance and the company performance underneath his earnings as well. They're performing on all cylinders there. No issues here whatsoever. Great job by us as retail. And on to number 1, and it's a controversial one, and that would be Tesla. Tesla fell out of favor for a while, and here it is. It's right back in favor. Obviously, there's some drama going on with Tesla right now, so we'll see exactly how that all plays out and how it affects this list. But hey, it's a stock retail continues to get behind. Definitely one that I own as well. I don't like the valuation right now. So for me, it's not close to my buy target right now, but I understand why retail wants to be involved with the stock. They've been involved with the stock for a long, long time. It's definitely the most volatile large cap, mega cap stock I've ever seen before in my life. Probably going to continue to be that way into the future there. Some definitely interesting things happening. But for me, from a valuation standpoint, it is overvalued right now by any metric. Doesn't matter what metric you look at. And yes, I understand robo-taxis coming and all this other stuff that I don't know when they're going to provide these trillions of dollars people want to add to the valuation right now. But it's not going to be anytime this year. And unfortunately, whether we like it or not, that's what Wall Street is going to move the price on in the meantime. So definitely a stock that I own. I absolutely love the company itself, but I do have massive valuation concerns at this particular stage. And if you want to see my complete watch list with price targets, you want to see all my buy and sell alerts on real time on all of these stocks that I'm interested in, and you want to get your free coaching, be a part of the best 6, 7, and 8 figure Discord out there, take the free courses, be able to talk to me anytime you want, be able to talk to our experts in our group that we have, make sure you check out the pinned comment. I may have left something special for those of you guys that stuck around this long. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.